Bloomberg Audio Studios. Podcasts, radio, news.
The single best idea today were really interesting conversations. John Farrow with the former Vice President of the United States, Mr. Pence on his boss, Mr. Trump, of a few years ago, and a lengthy conversation with the mayor of New York that was just electric about the tensions of the nation, the tension of New York City with the Trump administration. We did look at the equity markets and the cross-asset markets. Jeffrey Yu of BNY, really quite good. Visiting from London was Andrew Sheets of Brown University and Morgan Stanley. Andrew Sheets on the moment at hand.
I think what is challenging is that if we look at trying to quantify that question, can we come up with indicators that give us a better than average odds of thinking about short-term direction? I think what you find, or what we've found, is that those indicators work well or better under fear. Under extreme fear. Your previous guest referred to kind of April 2nd. You can find signals that work on average more often than not under extreme fear to give you short-term buy signals. It is very hard. We have been unsuccessful, much less successful to give you sell signals. It's much harder to call tops. It's much harder to find indicators that successfully do that.
To link the mathematics of Wall Street into the moment, that was absolutely brilliant, folks. I can't say enough about how systems function and bets and probabilities function better with fear in the market. We're not there now with the VIX under 16. It's just not there. And the answer is it's way harder to do the prediction game right now. Andrew Sheets of Morgan Stanley. Julian Emanuel of Evercore ISI looking at these equity markets that refuse to go down.
None of them are out there at the moment, which is why, again, it's such a challenge here, and why, frankly, stocks have become as expensive as they are. The rebound from that sentiment trough in April, because we knew there wasn't going to be a recession. We still don't think there's a recession. We do think that there's a slowdown that continues in the second half. The second is what we would call an uncooperative Fed. By uncooperative, we mean hiking. Look, they're not going to hike. There's no inflation reading we can see in the next several months. However high, where they will hike, they may cut less, but they're not hiking. The third would be longer-term yields spiking. Let's face it, the 10-year yield, it's 4.30 every day of the week for the last 2 years. And that's how it is. And that's a good thing. And that's part of why investors have had enough confidence to bid up stocks. And then the last one is the one that we think that eventually will end the bull market cycle. And that's a period of FOMO and capital markets activity. Every single bull market has that in the late stages.
And we saw that again today with Kellogg's. We learned that John Tucker liked Apple Jacks as a child. I never liked. Did you like Apple? I never liked Apple. You liked Apple Jacks. I never liked Apple Jacks. It was a tortured childhood. My sister liked Trix. Kellogg's owns Trix. It is single best idea. Thank you for listening across the nation on Apple Podcasts, Spotify as well, and on YouTube Podcasts. This is single best idea.